Gold's more of like the fallback and the analog money. So I'm generally bullish long term on gold, and dollars are the most important comparison because it's the global reserve currency. Um, you're doing a fundamental currency analysis. You're saying what are the fundamentals between these two? So Bitcoin's obviously more scarce. It's energy backed. It's open. The dollar is debasing and it's controlled. So if we have frictions moving gold around, for example, it's expensive to move and secure and authenticate gold with every major settlement. Instead, we will go and trust a third party. And if you and I want to make a transaction, we just go to that third party and say, hey, take some credits out of my account and put it into her account, or take some credits out of her account and put it into my account. And so the ownership of that gold is basically recorded on a centralized ledger and moves a lot more frequently than the gold itself.
Gold hit new all-time highs this week, precisely at the same time as Bitcoin. The two assets continue to perform very well and seem to continue breaking out to the upside. Optimist holders point out to $3,000 in gold soon. On the other side, silver still has a long way to go till new highs. In today's show, Lyn Alden talks about the relationship between gold, Bitcoin, and the future of money in the American economy. Hit the like button, smash the subscribe button, and take advantage of our sign-up promos to start getting into crypto for free. Enjoy the video.
Well, considering the move in interest rates. So if a few years ago, if you asked people if interest rates go from 0 to 5%, what is gold going to do? Most people probably would have thought it'd be lower than it is now. So the fact that it's kind of held where it is pretty remarkable. There's a lot of central bank buying. It's the kind of reserve asset of choice for central banks that are concerned around the dollar being frozen or the dollar being debased, depending on what their particular view of that is. And so the fact that you have a scarce money that can be self-custodied, that it can't just be unilaterally frozen, is attractive. And so I expect in the years ahead for gold to probably do pretty well. I think the main competition for it is from Bitcoin, because gold and other metals historically there's multiple markets. Obviously, there's the central bank market, but then there's also the retail market, and some portion of the retail market is now prefers to own Bitcoin. And then even some of in small amounts, even some of the sovereigns, for example, the Kingdom of Bhutan was mining Bitcoin. There are some of the Emirates that are getting into Bitcoin related assets. Singapore has been looking at that area, right? So around the margins, El Salvador is another example. So around the margins, that is interesting to some countries as well. And so monies do compete with each other. So I generally view Bitcoin as the likely outperformer, but obviously it's the younger, more volatile one. It relies on, the global internet being roughly functional. It relies on things like that, whereas gold's more of like the fallback and the analog money. So I'm generally bullish long term on gold, with some caveats. Addressed by more centralization. So if we have frictions moving gold around, for example, it's expensive to move and secure and authenticate gold with every major settlement. Instead, we will go and trust a third party. And if you and I want to make a transaction, we just go to that third party and say, hey, take some credits out of my account and put it into her account, or take some credits out of her account and put it into my account. And so the ownership of that gold is basically recorded on a centralized ledger and moves a lot more frequently than the gold itself. And then when you had a lot of those, you kind of tie into even another layer, central banking. So even if different third parties want to transfer value, they hold their reserves at an even bigger bank, and they just go to that bank and say, hey, move my account, these many credits from my account to their account. And so we had this increasing tree of centralization around the world to address most of the problem where transactions and information can move around the world at the speed of light, but physical money could not. And then even when we drop gold from the system, at least for the most part, is still there for central bank collateral. But when we mostly dropped out of the system, it relies still on these very centralized ledgers. And the two issues with that is it means a central authority can, one, determine how much units exist, And especially when you look at the long tail of 160 different currencies, a lot of them get debased pretty quickly. And that's what people's savings and wages are denominated in. And the other one is they can control who can transact with someone else, or whose money gets frozen, what payments can be made. And Bitcoin's kind of the first major break of that trend, which is to say that now that bandwidth and other thing, encryption, hardware, bandwidth, a lot of these things have improved to the point where now we actually have decentralized ways to send and update a ledger around the world. So instead of one central entity managing a ledger, we can have multiple separate entities kind of work together to do that ledger in a rules-based, energy-backed manner. And so it's very hard to censor it, it's hard to debase it. And so that's kind of a trend shift in what is available to us. And so I think that's a technology worth leaning into. And it's obviously, it's 15 years in now. It's been going through tests. How robust is it? Is it the best way to do it? Are there other ways to do it? What other things can we do with this technology? There's also the importance of other sort of open source protocols. For example, there's Nostr, which is a social media protocol that's, it allows kind of different ecosystems to connect to each other open source. So for example, if you're on one social platform and you're censored, or you're on another social platform and you're censored, there are these open source alternatives. And I think basically we're in this environment where money systems and information systems are more likely to be kind of tightly controlled and censored, and basically have frictions imposed on them. And these open source alternatives, whether it's about money or information, are basically release valves for people to go around those blockades and build things to kind of strengthen those types of networks over.
Lyn Alden, an expert on money matters, points out that for people looking to protect their money, gold is the old school favorite, valued for centuries as a safe place to put your money during tough times. Bitcoin, on the other hand, is the new kid on the block, appealing to those who are tech savvy and maybe a bit skeptical of traditional banks and paper money. Alden makes it clear that choosing between gold and Bitcoin isn't just about picking an investment. It's about understanding where money is heading in the future. Gold is something you can hold in your hand, and its history gives people confidence. Bitcoin is digital and represents a new way of thinking about what money can be, free from government control and banks. But with its ups and downs in value, it can be a risky choice. Lyn Alden highlights that in a world where the value of money can swing wildly because of government decisions or economic crises, having a mix of old and new, some gold for safety and some Bitcoin for the potential of high returns, might be a smart way to go. It's a reminder that in today's economy, putting all your eggs in one basket, whether it's traditional money, gold, or Bitcoin, is riskier than ever. Now we'll show you more clips of Alden, but first, subscribe, and turn on the notifications bell, and check our pinned comment for some massive sign-up bonuses. Enjoy the video.
Basically, all the debt that's denominated in those currencies represents demand for those currencies. And so they can take a long time before they lose all of their value. And then even when they do lose their value, they can be reset. The centralized entities can basically cut some zeros off their currencies and basically start over. And so I think that over time, Bitcoin kind of eats into these 160 fiat currencies. Basically says if you don't want to have your centralized debasing one, here's this decentralized open one. But obviously it has to go through a series of challenges. Every year that it doesn't get blocked, censored, hacked, it basically gets stronger and stronger over time. And as long as that trend keeps happening, I do think that there's a long period of time where there's coexistence, but at the kind of the end of the tunnel, I think that it's going to be increasingly untenable for a lot of countries to have their own fiat currencies. Maybe the major ones will find a way to hold on for that for a longer period of time. But I think starting with the long tail of weaker countries, it's very hard to maintain those currency monopolies. Dollars and Bitcoin, and dollars are the most important comparison because it's the global reserve currency. You're doing a fundamental currency analysis. You're saying what are the fundamentals between these two? So Bitcoin's obviously more scarce. It's energy backed. It's open. The dollar is debasing and it's controlled. But it does go through periods of tighter policy or looser policy. So, for example, if interest rates are zero and the money supply is growing, there's a lot less reason to hold dollars relative to anything else. On the other hand, if the Federal Reserve increases interest rates to 5%, and now you have positive real rates, that's a hardening force on the dollar, at least temporarily. And so other things that are denominated in dollars kind of contract a little bit. They get squeezed a little bit. And so global liquidity is basically a measure of saying, okay, what is global broad money supply denominated in dollars? Because that's relevant for all the global dollar denominated debt out there. And generally speaking, when that's like stagnant or falling, normally Bitcoin is having a correction or a consolidation. And normally when that's rising, Bitcoin is going up. And that makes sense because you're comparing basically this smaller, growing, harder money compared to a bigger incumbent money that goes through cycles of loosening or hardening. Um, and so over time, I think that Bitcoin becomes this connective tissue that ties a lot of other currencies together, and basically represents kind of a peer-to-peer store value and kind of payment method for people in all different countries in the world. And we just have to, every year is another test for it. Can it be stopped? Can it be hacked? Can it be centralized? Can it be permissioned? And every year that it does not, I think it's going to, over time, in kind of rolling 4-year periods, continue to take market share and displace some of these other systems.
Thank you so much.
For a while now. In 2022, my view was we were heading towards recession. But when we started to see by early 2023 signs of fiscal dominance, that the fiscal side was overriding the monetary side, I started to change my view on that. And that's still roughly the case, that there's no clear sign of recession on the horizon. And that's largely because of the fiscal side. And another way of thinking about it is that it's better to think of it sector by sector. So, for example, if we have wider than normal divergence between fiscal policy and monetary policy, so very loose fiscal policy, very tight monetary policy, it means that certain sectors are going to diverge from each other more than average. So, interest rate sensitive sectors like commercial real estate, for example, I would expect to continue to have recessionary conditions, while more businesses that are focused on travel, dining, technology, maybe healthcare, that I would expect to continue to hold up fairly well, which on average are a larger share of the economy. And so I tend to view us as in more of a stagflationary, or more of, I've been using the phrase emerging market landing, which is basically when the currency itself takes some of the brunt instead of a harder land.
What do you think of today's episode? Do you agree with Lyn Alden? Post in the comments section your price prediction for gold and Bitcoin for the end of 2024. And if you think holding Bitcoin is smarter than stacking gold and silver, thanks for your support, and watch this video right here because you'll love it. I see you on the other side.